Suppose you are given one profit and loss account, and then you are asked to calculate cash from operation on the basis of this income statement or profit and loss account. To opening stock, 0. To purchases, 5,000. To expenses, 1,000. To net profit, 4,000. Total, 10,000. Credit side, buy sales, 9,000. Buy closing stock, 1,000. Total, 10,000 rupees. What have you noticed? So you must have noticed, as compared to our old questions, there was no opening stock, there was no closing stock. But in this question, there is closing stock of 1,000 rupees. You just imagine about the two balance sheets of this company. In the last year, the stock must be 0, and at this moment, the stock must be 1,000. If you prepare balance sheets of two columns of last year and this year, I mean to say on asset side, in previous year it was 0 and now it is 1,000 rupees. Means there is change in the current asset. Till now, I was assuming that there is no current asset and no current liability. So there was no question of change. But in this question, it's clearly indicating that closing stock has jumped 0 to 1,000. Now you are asked to calculate cash from operation. Be careful. I have been repeating continuously that if the net profit is calculated on the basis of purely cash transaction and without any influence of change in current asset or liability, that is called cash from operation. But this net profit of 4,000 cannot be called cash from operation because it is influenced by the change in current asset, and that current asset is stock, because last year the stock was 0 and now it is 1,000. It means there is a jump of current asset of rupees 1,000. So let me prepare this income statement again into two parts. In the first part, I will take only cash transaction and no influence of closing stock or current asset. Then I'll make part 2. Profit and loss account part 1. Opening stock 0, purchases 5,000, expenses 1,000, and on credit side sales 9,000. So the net profit is rupees 3,000 and the total on both sides 9,000. Part 2. Buy net profit 3,000, buy closing stock 1,000, and net profit is 4,000. So the net profit calculated in part 1, that is rupees 3,000, that's purely based upon cash transaction as well as without any effect of change in current asset, and that current asset is stock. This net profit of rupees 3,000 is cash from operation, not 4,000. So it means if you are given any profit and loss account and you are asked to calculate cash from operation, so what's the best way? Net profit plus or minus the change in current assets. But in this situation, if you want to calculate cash from operation, the formula will be net profit rupees 4,000. Make the table and you can calculate all these things, minus increase in closing stock, that is rupees 1,000, and the net result is 3,000. This is the cash from operation. So what you have noticed, if there is any increase in the current asset, that will be deducted from the net profit and you can reach cash from operation. So the formula is net profit minus increase in current assets. So if there is any decrease in current asset, that will be added to net profit. So in this way, if there is any decrease in current liability, that will be deducted And if there is any increase in the current liability, that will be added to net profit. This will be the formula for upcoming questions. Or in other words, you can say that to calculate cash from operation, current assets and cash from operation has inverse relationship. It means if there is any increase in the current asset, that will be deducted. If there is any decrease in current asset, that will be added to net profit to reach cash from operation. So I'll go into details in the upcoming questions.